Right, so the U.S. Federal Reserve has increased interest rates in the most aggressive manner since 1994. But what impact will this have on the Indonesian stock market and economy? We'll discuss this further with Joshua Pardede, Chief Economist of Permata Bank. Hi, Pak Joshua. Thank you so much for joining us today again on Jakarta Movers and Shakers.
Thanks for having me, Krishna.
Right, so first of all, let's talk about the stock market. The IDX, as you saw just now, fell today for a net sell was at 1.2 trillion. In your view, is the Fed's tightening of monetary policy having a significant impact on Indonesian stocks, and how long will that impact last?
Yeah, I think the sentiment from latest rate hike from the Federal Reserve still dominate the market sentiment in the regional Asia and also in global market. Yeah, as you mentioned earlier, that the U.S. stock market plunged significantly, although in a week, and also in region in Asia also we are experiencing the same thing. And then because we note that the more aggressive the Fed moves currently will lead to the expectation of higher probability of hard landing in U.S. economy, and moreover, it could also affect hard landing in the global economy. So I think that's the concern that market expect to happen if the Fed still continue its aggressive moves in the next meetings. Yeah. So basically. And then looking at the current situation, yeah, we are still expecting that because of the sentiment factor that more dominantly dominates the market movement. So we think that the current situation will last in the short term, yeah, because again, foreign or investors will look at the fundamental of the economy itself.
Right, so you're saying that the fundamentals of Indonesia's economy is still good, in that investors will still see that, and the impact will only be on the short term. But as I mentioned today, there was a forward net sell of 1.2 trillion rupiah from the Indonesian stock market. Is this a trend that we're going to expect to see maybe next week, more forward net sell, as sentiment, in the U.S. is still quite bad right now?
Yeah, I agree that in the short term, yeah, the sentiment from the Fed still continue to impact negatively on foreign flows, yeah, to the emerging markets, yeah, because foreign investors tends to shift their portfolio to the safer assets or safe haven assets, yeah. So basically, yeah, it probably happens in the next week, yeah, whether the capital flight could continue, because I think market also still waiting for the Bank Indonesia decision for BI governors this month, yeah, whether BI still maintain policy rates or BI would start its normalization in the interest rates. So basically, it could happen, yeah, because, for example, like rupiah currently already broke 14,800 level, and if you look at from the technical perspective, yeah, it could break, yeah, nearly 15,000, yeah. So but basically again, this is mainly driven by the sentiment factor. So which I would say that the current situation will not last forever.
Okay, the impact will be short term, but let's go back to stocks for now. You say the impact is short term, but in the near future, which sectors do you think will be most impacted on the Indonesian Composite Index? Will be maybe the tech sector, because we see go-to stocks dropping as well.
Yeah, I think if you look at the current situation in the tech stocks, yeah, in GCI, year to date still recorded negative 14% negative performance, yeah. And then if you look at from the in the week, yeah, still tech companies along with other sectors also still recorded negative negative performance due to the recent rate hike. Yeah, but I believe that because of the sentiment from tightening monetary policy in U.S. and also other countries globally, I think stock companies, technology companies, and also technology stocks, yeah, will be affected, highly impacted, yeah, by this situation, because we noticed that in the past, yeah, before the tightening cycle from the Fed and other central banks, these companies, these technological stocks companies, experience or benefiting from the cheaper cost of fund, yeah, and also flush liquidity. And then because of tightening in liquidity condition, not cheap anymore cost of fund, I think this will impact negatively to the tech companies. But not only tech companies, but also other sectors which have highly leveraged, yeah, which have high debt, yeah, particularly for in dollar dominated. I think those companies and sectors will be impacted extremely, yeah, significantly by the recent the Fed sentiment.
Right. So those sectors affected by the dollar. Now, which sectors are those, Joshua? Could you just maybe elaborate further, aside from tech stocks?
Yeah, I think for the, if we look at the current situation now, that the energy sectors and also transportation sectors still recorded positive growth, yeah, positive performance, double-digit performance. And then if we look at from other sectors like properties and also consumers, yeah, still recorded negative performance year to date, yeah. But basically, we cannot see from the composite of the sectors, but we have to see each by each sectors, yeah. We cannot we have to do cherry picking stocks, yeah, in order to determine whether these companies has a highly leveraged or not, yeah, particularly in dollar dominated, and also if the sectors is also very sensitive to the interest rates, I think those sectors will be more impacted compared to others.
Right. And also today we saw some energy stocks drop quite significantly today. Could you just talk about that, the drop in energy stocks, and will it last, that kind of trend?
Yeah. In the past, historically, there are negative relationship between the strength in dollar and also the commodity prices. So I think this happened because of current moves from the Fed, which lead to the stronger dollar, and at the end of the day, commodity prices also tends to decrease. So I think it can be explained by that thing. But for some commodities, for example, like CPO, this week itself already dropped by 12%. Yeah. So I think basically because of the ban on Indonesia's export on CPO has been released. So basically there is some positive hope that the supply side globally on CPO will recover. So the commodity prices, particularly CPO, already decreased. Yeah, and also it happened also in oil prices and also gold prices. Yeah, because of there is a negative correlation or negative relationship between commodity price and also the strength in dollar.
Right. So some drops in commodity prices, energy stocks is something we should be looking out for as well, and also tech stocks, as you mentioned, something maybe to stay away from for the moment. But we're going to discuss more on the impact of the Fed and this global sentiment on the Indonesian stock market right after the break. Don't go anywhere. Stay tuned to Jakarta Movers and Shakers. Thank you, Joshua Pardede, talking about the impact of the Fed's tightening of monetary policy. What impact will that have on Indonesian stock market and also Indonesian economy? Now, prior to the break, we were talking about a little bit about what strategies Indonesian investors should take. Maybe just elaborate even further. In this current condition, how should Indonesian investors play it in the stock market?
Yeah, I think for now, investors should be more cautious, yeah, on some sectors or some stocks that would have high leverage, yeah, particularly in dollar-dominated, and also with the also we have to go with the companies with the good cash flows because of we know that the financial condition will tighten going forward. And in addition to that, I think for commodities and also related and stocks and also related to the logistic and also transportation, I think those two sectors still be preferable for time for the time being now because because of the high transportation costs and also for the increase in the commodity prices, I think still will be preferable, yeah, for commodity stocks and also for the the energy and also the transportation. And I think, as I mentioned, we need to be cautious on some sectors like properties and also industries, yeah, which has high leverage, and also technology companies or tech stocks, yeah, because they are benefiting on the low or the cheap cost of fund, yeah. So they need to cover to adjust, yeah, their cost of fund with the current situation that the cost of fund will be more expensive, yeah, going forward. I think those we need to do deeper analysis fundamentally on each stocks or each companies, yeah, to know better about the condition on these stocks, yeah.
All right, so cherry pick, deeper analysis, stay cautious, but as you said, focus maybe on energy, commodity stocks, and also transportation or logistics stocks as well. Now, as we were talking about before the break as well, you were saying that the impact of the sentiment in the US, the Fed, and so forth is short-term in Indonesia, but global sentiment is still bad. Now, many analysts in the US are fearing of a recession in the US. It's inevitable part of combating inflation in the US. What is your view on this, the US recession? Is it going to happen?
Yeah, I would agree with that because as you already mentioned as well, that the current the latest moves from the Fed is the highest in the three decades, yeah, by raising 75 basis point, and in order to curb the high inflationary pressure, currently almost more than 8%, 8.6%, still the highest in the last 40 years. I think yeah, there is no other option from the Fed, from the monetary authorities perspective, that the Fed will continue to increase policy rate, yeah, and based on latest FMC meeting, yeah, the Fed already released about the consensus of FMC members that by the end of this year, the Fed policy rate will be around 3.5%, and agree with that because with the more aggressive rate hike, this will lead to the higher cost of borrowing, and this will lead to this will be disincentive, yeah, for investments and also consumption, yeah. So basically, there is also higher probability that in the first quarter of 2024, that the U.S. economy will start to record negative growth, yeah. So then we still need to be cautious again because the negative or the contraction in the U.S. economy will lead to the negative sentiment globally because as we note that the U.S. economy accounts around 15 to 16% of the global economy. So basically, we still need to be cautious in the near to medium term, considering the more aggressive from the Fed itself.
Right, so US recession is inevitable, as you said. Now, just more specifically, what impact will that have on Indonesia once the US enters into recession?
Yeah, for sure that the investments from US and also the trade performance, yeah, particularly our exports to US might be declining, yeah, because of the because of the tighter liquidity condition, tighter financial conditions, and also slowdown in or hard landing in U.S. economy, and this will also lead to the slowing down in Indonesia economy, and then that's the transmission to the real economy, and then the short-term transmission. I think this will lead to the what we look at now currently on the capital market, that the stocks market tends to be decreasing, and also in the bond market, foreign investors still book net sell, So basically, we need to be cautious about the expectation of recession in U.S. economy, because the recession in the U.S. economy will lead risk of sentiment, and then next will be lead to the shifting to the safe haven assets, and then this will also lead to the capital flight from emerging countries, including Indonesia. So we need to be cautious the transmission of this expectation from the capital market and also the transmission to the real economy.
All right. So U.S. recession is something very concerning to look for. But still, Indonesian fundamentals are good, as you said earlier, and the Fed's tightening of monetary policy will be short-term so far. So hopefully things in the near term still remain good in Indonesia. Joshua Pardede, Chief Economist of Permata Bank, thank you so much for your insights today.
Thank you for having me, Krishna. Thank you.
All right, moving on. The United Nations World Food Program is to suspend humanitarian food aid to at least 1.7 million hungry people in South Sudan, blaming critical funding shortages. Now, Acting Country Director Adeyinka Badejo Sanogo said that humanitarian needs were far exceeding the funding that the WFP had received this year. This is deeply concerning, as millions of children will be threatened with acute malnourishment during the lean season. South Sudan faces unprecedented hunger amid climate shocks, soaring food prices linked to the war in Ukraine, and recovery from civil war. Over 60% of the population of more than 11 million people is now facing severe food insecurity, which said it had to have food rations last year. Now, among those now losing food aid in the middle of South Sudan's lean season are 178,000 children who will no longer receive school meals, the WFP said. Food security experts have warned that 1.4 million children will be acutely malnourished during the lean season between June and August.
WFP, we had planned to provide food assistance to 6.2 million people this year, but faced with increasing humanitarian needs and insufficient funding, we have taken the painful step to suspend food assistance to 1.7 million people. And these are people that are experiencing emergency and crisis levels of food insecurity, what we call IPC4 and IPC3.
Now, on the other hand, in China, poverty alleviation efforts have enhanced the life quality of people in northwest China's Xinjiang Uyghur Autonomous Region, especially in small villages. The people living in the old Daryaboi village that is located in Xinjiang's Takli Makan Desert for hundreds of years before moving to the new village. Now, the natural conditions in the desert are harsh, and there is a severe shortage of food and drinking water. They used to live in the houses that were built from poplars, reeds, and mud from the only river nearby, and a piece of poplar wood could be used as a door. Everything began to change in 2015 when poverty alleviation efforts began. The local government started building a new village for residents of Daryaboi, and people moved there after a few years.
Our people moved to this new village in 3 stages from 2015 to 2019. There were about 1,300 people in total. The government provided them with new houses for free. Now children's education is free, and the water is clean. We also have a clinic. People mainly breed sheep and grow herbs. The per capita income of the village in 2021 was $1,800.
We'll have more stories for you right after the break. Don't go anywhere. Stay tuned to Jakarta Movers and Shakers.